Well, hi, friends. Chris Kelly here. Happy St. Patrick's Day. That's the reason for the little green hats. And, I'm wearing a green shirt, so really unnecessary, but I thought it was cute, and so did my office. So, anyway, happy St. Patrick's Day to you and yours. Anyway, it's that time of the week. I wanted to take a little bit of a look at what's going on in the market with stats and data and interest rates and just all of the things that affect the world of real estate. So let's jump in and have a look at what's going on. Here's the most recent market activity, which was reflective of basically last week's activity. New listings are starting to come up. You can see, though, I mean, we're still below last year by most metrics. I mean, our pending sales were really decent, certainly better than 2020. We're right at the point, though, in 2020 where the pause started. It isn't quite reflected yet here, but in the next couple of weeks, you'll see what that looked like again. That's when I very first started reporting on this stuff and started doing this post. Anyway, you can see last year was super robust. But there's more listings, more pending sales, a little bit more sold listings. So, I mean, we are improving week over week. And like I said, we've been bouncing in the lower half of the fives for quite a while. We spiked up quite a bit higher than this even for a little bit, and then kind of went back down under five and been kind of living in that lower half of fives. Now we're starting to flirt with the upper half of the fives as far as median sales price is concerned. Average 605, north of 600,000 still. Median days on the market, 5. That seemed to be the magic number for a lot of last year. Now, comparing this to the overall RMLS stats, so this is just a stat sheet that the multiple listing service puts out. And their data is a little bit different than ours. Their average market time or average days on the market's a little higher. Their medians and averages are a little different. Mind you, this is only through February because they do theirs on a monthly basis. And they also include quad counties. So they're including Clark County, which my data does not. My data only includes the Tri-County area of Portland Metro. So anyway, a little bit of a difference there, but it's nice to see, the actual numerical data. These are pretty low numbers comparatively, historically speaking. So anyway, that's, let me get back to my sheet. I'm not going to say this is problematic at all. As I said before, I'd like to see new listings get up into the into the eights and really get up over 1,000. If we got new listings up north of 1,000 for 6 weeks, that would really, really be helpful. That would help alleviate multiple offers and maybe actually put market time into the 20 days on the market for a median, which would be a big help for all of the folks out there trying to be buyers. And sellers might say, well, we don't want that. Well, maybe is what I would say to that. You may not want that as a seller, but most sellers are buyers. And if you're a buyer in this market, the problems we've been having with the market are probably keeping you from being a buyer, which is keeping you from being a seller. I mean, bar none, that's the biggest issue that we have as professionals is, hey, Chris, we'd love to move, but we know we can't find anything, so we're just not gonna. That's absolutely a thing. And so as the market cools or normalizes is probably a better word, i.e. A little more days on the market, more inventory to choose from. What that will do is release some sellers to be sellers because now they think they can actually be buyers and believe they can actually be buyers, which is great. It's what I guess what I would say is what would cause that? Well, as I've said before, the adjusting the levers of finance are probably one of the more major things that cause that. So that said, the Feds, I think it happened here today, hiked rates. What will that do to long-term interest rates, i.e. mortgage interest? It'll have an impact. I mean, it already had an impact ahead of the anticipation of it. So I mean, there are a myriad of other variables that contribute to what's going to happen to interest rates, geopolitically speaking, just in the markets themselves and otherwise. But um, interest rates moving up will have a positive impact about on the things that I'm sitting here talking about. In other words, does that slow down and cool down the marketplace a little bit? Yeah, it does. Could the market use that? Yes, it could. Says the guy, you'd think intuitively that I'd love a hot market. I do like a hot market, but I don't love a market that is unsustainable, or that is, that people start making really questionable decisions to win as a buyer. I mean, I'm seeing some things that are just nutty. Um, we wrote an offer this last week, 100 grand over, and somebody was another 100 grand over. So 200,000 over list on a $600,000 house. That's just, and where it was, it's just insane to me. But that's the world we live in right now, and it makes it hard for a buyer to look at stuff and say, well, we want to buy a $600,000 house, so I guess we should only look up to five and a quarter, because we expect that we're going to have to be that far over. But is that true every time? No. So it's a very, very different dynamic looking at real estate right now as a buyer, and anticipating what's going to happen as a seller selling real estate. But that's our job as professionals. As I always say, our job's to give you good information so you can make sound decisions about being a buyer, being a seller. Admittedly, that's harder to do for us than it's probably ever been in my career. But that's the job, and that's what and that's our goal, is to do just that, to help you make good decisions by providing you good, sound information and advice. So anyway, I hope you find this helpful as always. I want you to know that we're here for you and yours. This is the reason I do this every week. So if there's something we can be doing, please, by all means, let us know. And I'm going to probably make this a weekly public service announcement for the coming weeks, until I fill the void or fill the need. As I said last week for the first time, we're looking for a couple of good folks to join us on our team on Kelly Marketing Group. So I'm looking for somebody that's a great agent, either somebody that's already a strong producing agent, or somebody well on their way to being that. I will train somebody new. I don't prefer it, but I will. I'm also looking for a very capable lieutenant, for a lack of a better term, for me personally. Somebody that can be in here working alongside me, leveraging my time, reaching out to the people that I know and the people that I care about. So if you know somebody that might fit one of those needs, and you think would be a great fit to our culture, I'd sure love to hear from you. I'd sure love to know about it. So by all means, let us know. And like I said, as always, we're here for you and yours. So until the next time.